So hi guys, and welcome to our video today analysing the stock MANU, Manchester United Plc. So I'm going to talk about the technicals of this breakout and what the stock's going to do first, and then my own personal opinions on it and why it's going up outside of the technicals. I am a full-time day trader, as you know if you're in the Discord or a subscriber. And I'm also a match going Man United fan. So this sort of stuff is interesting to me. So let us just get into it. So technicals first. I mean, we have the Golden Cross here on the 30th of June, 1st of July, around that area. And that basically means a strengthening of trend. The 60 EMA positively crossing through the 200 EMA and 200 MA. So the thick gold line positively crosses 200 MA, the thick white line, and 200 EMA. One of the two. This time we did both. And that basically just means strengthening the trend, healthy uptrend, and we should continue up for the next few weeks or months, as it is the daily time frame. So it's not going to happen overnight. It's days here. Candles created on days, and you have 5 days in the week from the stock market. So you can see there's lots of candles here. It's this is June and July we're talking about. So it's not going to happen overnight. So Golden Cross retest around that time, and then really messy retest on the 200 EMA and MA just here. Actually coming down 10% from the low point here. 7%. So yeah, you'd have a 10% stop loss when swing trading. So that came down 7%. It's called a wick off spring. Just before it starts to go back up again, just to do the stop loss raid. And yes, people who put a bet on the stock saying, it's definitely not. I'm going to enter around here, 15.7, but I don't think it's ever going to go beneath 15. Just have that little mitigation in place. But obviously, it went through 15 and it took out all the positions. So that's called a stop loss, and what a stop loss does basically. And for those that don't know, and yeah, so like right now we had the technical breakout. So we had a falling wedge breakout on the 1-day demand level, very strong demand level, means a lot of demand, and yeah, we're carrying through. So for 3 touches beside the wedge for mature enough consolidation, I actually entered a position around 16.75 on this, and I expected to come towards 18.2 at least for a bit of confluence of supply over here. It's not a main supply area, 18.2. There's a short-term confluence of resistance here that had built up over the summer of 2025, July and August, essentially. So I'd say 18.2 looks, should never say it looks dead on, but it looks screwed on. And then ultimately just to dwindle back towards 20. So I think this one will come to 18.2 and then 20 on this, as momentum suggests. And the main thing to me on here was a 4-hour time frame. So we actually did have one thing I forgot to mention actually. On the daily time frame, we were really close to getting a death cross. So golden cross is positive, obviously. The death cross is negative. So that means when this gold line negatively goes through, it just missed it. So recent activity and in the stock and the price and the volume has just avoided this thick gold line negatively going through the white line here, and that means it's avoided a death cross, decrease and weakening of trend as it's been doing since end of August, as you can see. So the 4-hour time frame actually did get one, but it's not as strong. The daily time frame and the weekly time frame are the main ones. The 4 hours kind of like the intraday, helps a bit in between for entering positions. So we did get one. But we can easily have this turn into a golden cross again if we just keep on trending up. So a death cross on here formed by another golden cross, it means the death cross becomes invalid. It's just price consolidating in a messy fashion. So ultimately, back on track though. I think this one will continue up. It's the main thing to me is just it's reclaimed the 200 simple moving average here. That was the main thing I was waiting for, and you want a sort of strong close above that. So around 16.75, like I say, is where I entered. Now it's up around 17.10. Like I said, I think this one will come up to 18.2 as it's a massive supply area and a short-term confluence of resistance. So it's a good place to take profit. But ultimately, I do think we'll come towards 20 on this. Basically, just off the strength of the trend, and the 4 hours reclaimed all its moving averages. The 200 simple moving average being a big one. It was beneath there for how long was it beneath here? A few days. So the price did have a bit of a shakeout before it broke out again. So I can't remember when this Saudi news came in. This UAE news came in. Obviously, the talk of new investor has allowed this squeeze to happen, because a new investor means also potentially, new majority shareholder, if that's what the Glazers want to do. The owners of the stock and the club. And that also means if a new person were to come in, they can always decide to just delist it off the New York Stock Exchange, and therefore the price will squeeze. A short squeeze is called as a result. Everyone bets on the stock to go down because it's going to get delisted, and then those people get trapped by the stock market who the price gets drived up, trying to trap all those retail traders. So yeah, I think this one will continue to towards 18.2, then 20 with the falling wedge breakout against on the 1 day demand level here, 15.7. 4 hour was just massive strength of reclaiming the 200 moving average here, and the top of the wedge. I should mention this. The top of the wedge is always a structurally on the chart is a sort of the first target structurally. As a day trader, what you want to do is have you want to have certainty. You want to have strict take profit plans in place, and that's based off working out on your Excel spreadsheet what price point is it the most. Is it plus 6%, 8%? I always like to take profit at 10%, so I'd always take profit along the way rather than hold for up here. The top of the wedge is around $19, 19.5. That's plus 13, 14% or so. So structurally off the chart, it should come to 19. I definitely think it's going to come to 18.2. I'm going to look to take profit around there. And yeah, this one looks good for continuation. And if you zoom out even further, or even not even that, we go to the weekly time frame. Massive resistance here that we're just breaking through. So it's a 200 EMA and 200 MA on the weekly now. And the Bollinger Band Center, this orange line, when we're beneath it, we're 65% more likely to remain beneath it. When we're above it, we're 65% more likely to remain above it. And obviously, if we can close above this by the end of the week, for Friday, the 17th of October, 2025, then yeah, we should easily continue towards 19, I think, 18 and 19. So again, just because I'm a trader and I have risk management and strict take profit plans, I'm probably going to take profit around 18.2 and leave some to ride. But I think this one will come towards 19 to 20 on this. It looks good, especially the weekly looks really good. A weekly close over 17 or 16.95 should see it continue over the next 3 to 4 weeks. So it looks exciting. Obviously, if the share price is going up, that means there's definitely strong stuff going on. And talk of a new investor and potentially a new majority shareholder. Not everyone's. I'm a United fan, so sick of the same stuff year after year. It gets worse in terms of the ownership. So you don't expect anything, but the main shake that broke the news is very reputable, and the technicals on the chart, that's what I go off the most, as it's my profession, and it doesn't lie. It is a breakout. It looks like it's in its way to the higher 19s and 20, to be honest. That's a major resistance, 20. So yeah, the price is going up, guys, because of this, and there is some truth to it. What's going on? So obviously, what I expect from next is if we do break 20, we should come to at least 22, I would say, in between the mid-range. But it's one step at a time. The main thing that was interesting to me, though, is going back to daily time frame on this. So it's a technical breakout. As you can see, people saying there's nothing in it. It's a technical breakout, and this is even more so. So what I'm going to do here is just turn off my indicators and drawings. So it's the money flow index, guys. So this is basically a line graph between 0 to 100, and when it's at 100, it means the money inflow into the stock has reached a maximum capacity. No more money can come into stock, hypothetically. Obviously, more money can come in, but in terms of how this oscillator is calculated, the stock is overheated. Is massive. It's like Bitcoin in a massive bull run. It'll hit like 95 or 100 on the money flow index on the weekly, and then that's just get out. It's about to come down. It's hit a peak. Mad euphoria in the stock or the crypto in that circumstance. And obviously 0 means there's nothing in it. Even just anyone shoving some decent money in will drive the price of stock up, or cryptocurrency. So that's how it works. And the thing here is the price was around 17.8 on the end of August, and ever since then we've been in a downtrend. So as you can see, downtrend like that, right, on the price chart from the end of August. However, what I see also, let me turn my drawings off. The money flow index, the money flowing into the stock hit a low around here, and then so the money inflowing into the stock and the people buying the stock has actually been going up as the share price has been going down. There's been some accumulation going on. I don't know what's been going on. We all hear mad stories, but I don't know what's been going on. But that's price going down and money flow index going up. So people have been accumulating at this low price, and we did actually have a wick off spring as well, which I'll talk about. So people have been buying this stock at this low in expectation of a technical breakout to me, but it happens for a reason, guys. There is a lot of truth in what's going on. So people have been accumulating these lows here, and we did have a breakout earlier on a 1-day demand level. So that 15.7 area, we broke out here technically, and the entry point should be around here. I only saw it a bit late since the news of the takeover. I never really look at this stock. It's not got enough volume as a day trader, so the entry would be there, and you have around a 10% stop loss from the entry range, which is 15.7, which you're entering based off that demand area, and that's to cover you from a wick off spring, and that's a wick off spring, a strong bottom wick to stop loss rate is called, getting rid of all the retail traders and making sure the stock goes up without them in it, liquidating their positions. So yeah, and then obviously stop loss keeps you in a 10%, and the stock starts to go back up once that happens. So this is all technical. There's a lot of truth to what's going on, guys. It's all technical. So I think the stock's going to continue going up on this. I think it's going to hit 9. I think it's either going to hit 18 some point this week, maybe tomorrow. I think you're probably going to hit 20 by the 24th of October. And yeah, that's a resistance, so you have to respect that. And we'll see from there, guys. So if it can break 20, that's when I imagine there'll be a lot of more stuff going on about talk of a majority shareholder, in my opinion. So it does look good. It looks good. So it looks good for continuation on this. My personal opinion on this, that's the technicals. That's all I have to say on that. Again, it's all technical, guys, right in front of you. So in my opinion, the Glazers always wanted to sell around the 2026 World Cup. That was always a major thing. Buy the club and sell it. When the product is the most valuable when it's in front of everyone and it runs itself. So the 2026 World Cup, in America, it's in front of everyone, isn't it? Glazers, as American owners, and obviously the product runs itself. Man United, the revenue can run itself. The manager. Obviously, it's different from when Fergie was there, but the structure, once you get the structure in place, it can run itself. The Glazers, obviously, they just take the dividends out and oversee the club, whereas Sir Jim Ratcliffe, etc., run the football operations, so they don't need to do too much in terms of the football guys. So if that can run itself and it's in front of the whole world, which they've obviously done now since employing Ineos and Omar Barada, Jason Wilcox, etc., to run the football thing, they're running itself without the Glazers. So that's the perfect time to sell. If a product can run itself and it's in front of everyone, and to be honest, from that, in terms of adding more value, they've also had the investment from Ineos and Jim Ratcliffe for the new stadium and training complex. Injection of cash, adding to the value. The Glazers didn't have to pay for that training complex. That was basically Ineos. Obviously, the stadium is up in debate, but there is plans for a new stadium, which is only going to add to the value of the club. And now, in my opinion, I think I wouldn't be surprised to see them, want to override him and sell his shares with the Dragon clause, because this Golden Cross happened a month before the Dragon clause, and the strength of the trend, so it's already pricing in. Sounds ridiculous, but the stock was up a decent amount, gapped up from here, from just 14 to around 19. That's ridiculous for a mid-cap stock. That's quite a lot. It's plus 40%. That's more than the small caps that I trade. So yeah, it's already priced in a bit. The potential of them doing him over basically with that Dragon clause, as the stock already gone up in value, and now that it's been it's been public knowledge to the public. So the Dragon clause priced in over here in terms of the Glazers doing him over and selling his shares, and then the public knowledge comes into play around here, and then the stock goes up to meet that value, okay? And then if we get somewhere, then probably pull back, start resistance, and break out. And that's also a cup and handle, guys. So technicals always match the fundamentals. Whatever makes sense in your head, that's how it works in trading. So yeah, I'm a United fan, so personally I don't have my hopes up for majority sale, a complete takeover. Just as every year as a United fan it gets worse. But the technicals don't lie, so I am kind of hopeful with this. So yeah, basically, it makes sense, getting the injection of cash to get the training complex, propose a new stadium, and then adding more value to the club, and then you're getting, the Ineos team in place, Omar Barada, Jason Wilcox, Dan Ashworth, who's now left the club, and there's, there's all sorts of people there. now. So the product can run itself. It's most valuable when it's in front of everyone at the 2026 World Cup. And we've also got the bear market projected in 2026. So yeah, you will start to see this sort of stuff come into play now for a quarter 4 or maybe late quarter 1 sale, in my opinion. So yeah. Anyway, guys, I could talk all day about this. Like I said, it's my profession, and I'm a match going fan. So yeah, that's it, guys. So again, 18, then 19, then 20. I think we'll definitely come around to 20. Thinking about it in terms of this was a pricing of doing them over with the Dragon Clause. And that's public information. You would come and marry that price point that was already priced in, and then you get your cup handle formation breakout if something were to happen. So yeah, it looks good, guys. There is truth in it. And again, avoid the death cross here in the daily. So again, if you want to learn how to trade and you're new to this and it seems interesting, check us out in the Discord. Link in the video description. I'm from Manchester. A normal person who just happens to trade by profession. So yeah, if something you're interested in, you can always book a one-to-one with me, or yeah, just join us for as little as £12 a month, guys. So thanks for watching, and yeah, catch you all later.